Hello and welcome back to another episode of the Market Outlook series. I'm Kavita Agrawal, the founder of EXP Invest, and we are here today to discuss about Nifty, Bank Nifty, and the intersector chart analysis. We will start with the 3-minute time frame of Nifty, and we see what has happened in the market and what does that tell us from the analysis of price action and volume about what is going to happen in the upcoming weeks in the market. Without any delay, I'm going to share my chart now, and as you can see, this is my layout. It has 6 windows, and I primarily look at 3-minute, 15-minute, 75-minute time frames on the intraday level, and daily, weekly, and 5-week time frame on to get a sense of the larger time frame. Now, this is a 3-minute time frame, and what I can see is that we've today tested this resistance of 22,500. Now, if you've been watching my market outlook since the past few weeks, we have been predicting that the market would take a massive correction. So our resistance was 22,775, a level that Nifty tested around 2 to 3 times before it went into massive correction. Now, this entire correction that we are seeing, I've drawn a Fibonacci retracement on it right here. What this is suggesting is that we've completed percent retracement today in the market, and we are finding it a little difficult to go beyond the key resistance of 22,500. So our past two resistances of 22,000 and 22,250 have also lent significant resistance. However, they were breached, and now whether 22,500 gets breached or not is going to be the real test of the market. My analysis suggests that basis the negative divergence that has already emerged on 3-minute time frame of Nifty, it might be a little difficult for 22,500 to get breached. Coming to the 15-minute time frame, again, what we are noticing here is this, that when the market was still in a bull trend, we were seeing Nifty touch levels of 70 and above, or 75, roughly up to 75. But ever since this peak has gotten forged, we have not come back up. Now, sure, even price-wise, we are a little bit low, but the last time when we were near this level, if you notice, the RSI was doing a lot better versus this time it is not. And here, if you see closely, you will also notice there is a negative divergence, so I will not read too much into this just as yet. Another thing that is very noticeable is the volume profile. The volume, this is the MACD plot of the volume, and this suggests that the volume has been increasing with increase in price. However, in the last leg of the upside that we saw, especially this entire stretch of, let's see how many points, around 300 points, there the volume did manage to pick up quite a bit. So this resistance of 22,500 is actually very important, and we need to wait and watch with respect to what the market does. Now, talking about the 75-minute time frame, again, not much positivity out here based on the historical price action. Sure, there was massive negative divergence here, and the overall range of Nifty has moved significantly lower. But that being said, I also notice a small positive divergence here between this bottom of 19th April and this bottom that we formed on 13th May. And this is slightly positive, right? Again, this brings us to the same conclusion that we have to see whether the 61.8% resistance of the correction that we've just seen, whether it really is able to hold or whether we are able to go above the level of 78.6% retracement. So 22,500 on an overall level continues to be a very important resistance. Now, talking about the daily time frame, there is a massive negative divergence, as you can see here. But this important trend line, which I've highlighted with the thick blue line, this one has already been tested. Now, my analysis suggests that if we are not able to sustain this upside, because there is strong resistance coming in from this peak as well, plus the 61.8%, plus there was consolidation here. You see this consolidation here, and then this peak here, plus the 61.8% retracement. If all of these things continue to pose threat, then there is a pretty good chance that Nifty can correct further and maybe go as low as 21,620. With that, let's move forward to the analysis of Bank Nifty, and again start from the 3-minute time frame. Now, the 3-minute chart of Bank Nifty is definitely looking better than the charts of Nifty, because I'm noticing a positive range shift here, which was not noticed on the chart of Nifty. Even the 15-minute time frame is showing a positive range shift here, which is one of the earlier signs of a positive divergence, however, of a positive momentum. However, there is absence of a positive divergence here. Typically, what I've seen in the broader market indices is that a positive divergence does lead the beginning of a fresh rally. Since that is not present yet, we might expect that another leg of correction can happen. The 75-minute time frame, again, we see that the prices did come down to breach the level of 40, but not really touch the level of 30. So it neither respected the bullish, in which the support is typically 40, neither did it break down to go below. So the market is in a bit of a mixed state, I would say. Now, one clear signal that is coming on the chart of Bank Nifty is that this decline that we saw was against poor volumes, which means that pressure wise or participation wise, we didn't see a lot of heavy selling in the banking stocks, which is positive, which we'll again have to notice whether or not we are able to sustain above this key resistance of 48,500 on Bank Nifty. And when we do, whether or not volume comes back. So even on Bank Nifty, we have a bit of a mixed signal, but Nifty is suggesting 22,500 can act as a key resistance. With that, let's move towards the indices. Now, as you're aware, this is my inter-sector or inter-index chart or layout. So here what you're seeing is multiple indices have been plotted, and this is on the 75 minutes. So I will just let it be. I want to compare from the 13th of May, because that's where we seem to have seen a bit of a market bottom, and I want to see how have the sectors performed relatively. So during the correction, you saw CNX Realty was the biggest loser, because CNX Realty, we're seeing a lot of momentum there. And while I am not very eager to create fresh positions in reality, because I really prefer to steer clear of stocks which have given very strong moves already, or as per Elliott wave count, they appear to be in the fifth wave of the unfolding impulse, because when they start falling, they have a major correction in front of them, so the risk reward ratio is not very attractive there. That being said, so reality sector is something that I would prefer to steer clear of for the time being, as in if there are active positions, I would trail them, but I wouldn't be very excited about creating fresh positions there. Next, the metal sector, I think more rally can come here, because some of the metal stocks have taken a little bit of a consolidation or correction and are giving signs of positive momentum. The PSE sector rally continues to remain strong as ever. The consumer durable is doing a ping pong kind of thing. Sometimes it starts looking bullish, sometimes not so much. I think it's just experiencing a lot of competition from other major sectors. The infra sector is again same like the reality sector. I would not prefer to make fresh positions there, because I am experiencing or noticing on the charts some negative divergence or early signs of exhaustion, momentum exhaustion. So I would prefer to again stay clear of infra stocks for the time being. The energy sector on the overall level, on an overall basis, looks like a mixed bag. There are some stocks which look good, some that don't. Also, crude oil, I'm expecting the prices to increase, which is a threat to both the stock market and especially the energy sector. So because I have mixed signals in the energy sector, I am being very selective about the stocks that I pick up there. Healthcare and pharma, selectively, but very attractive opportunities. Like today, one of my picks in my portfolio management service, Glaxo, has gone up significantly, which was amazing. CNX consumption, auto sector, I think again, I would wait for some correction in the auto sector before going forward. I am not, and Tata Motor, we're already seeing that decline. I was also seeing the chart of Bajaj Auto, that is also not looking very attractive. So I am not very keen about making fresh positions in the auto sector either. IT sector actually started to look really attractive. Even Infosys, TCS have started giving major positive divergences, creating higher highs on lower time frames. So I think IT sector is somewhere you should definitely pay a lot of attention to. I think the next rally that we see in the market can be led by the sector. So that's it about today's market outlook. I am going to take the remaining time to answer your stock queries. So you're already seeing the form link above my head here. Just visit expinvest.in/stock request. Fill the form to get your queries answered. So I can see that around 20 people have already received answers to their query. Another 20 people have already asked their query. So I'm going to start answering. And if you also want your stock queries to get responded to by me in the upcoming sessions, just go ahead and fill up the form and we'll get to it when we get to it. So let me take a look at the queries that I will be resolving today. So we respond one query per person per day. If you are filling up too many stocks one by one, expect to receive responses over time. Let's get started with Ranjit's query on RV. And let's just save this, make sure that other layouts don't suffer. Let's move on and start the analysis from fresh. Here we've got positive trend unfolding, very strong, very positive trend unfolding. And here I see this was a very strong resistance. So the broad trend on RVNL is definitely very bullish. It is extremely attractive for the long term. So if you plan on holding this for the long term, superb purchase. In fact, again, emphasizing for long term, it is in fact even a good time to buy this stock right now, because it is just coming out of this upward trending rectangular consolidation phase. And once it gives breakout above the level of 32 is where I would expect it to, just like it gave this massive rally here, is what I would expect. Now, if you look at the history of RVNL, it's always done this. It's always gone into consolidation. Stop loss and make sure the next best support is around the level of 243. Naturally, the very first target would be around the level of 350 rupees. And above that, very hard to put a next target for you move. It's around 60, 61, around 40, 42, around 76. So I would expect at least 30 moves beyond the peak. So around 420 is where your next expected target should lie on this stock. Next, we will move on to IRFC at 160. Cost price is 160. So fantastic move. This has also started to go into a new leg of bull trend. We can move up to the joining peaks here because they seem to be more well established and those are kind of fundamentally themselves. So we go to peaks, and here I can see these trend lines extremely fast moving stocks. See. And here again, I can see that once this correction was done at the other side on the daily time frame level of 40, very textbook fashion, again a fresh new rally has started. Only 25% in 64 days, which is very, very small for this stock. The last time the stock gave a massive rally of 190% in just 90 days. So I am expecting that an accelerated rally is just about to start in IRC, and I believe that once correction results are through, we will see the unleashing of. Now, in the next few days, there's some correction, so that might be good to pick up the stock. Here, I would expect correction to the level of 160. So that would be good time to make fresh entry. Your stop loss here should be at the level of 142, or maybe a little bit more conservative, the next best support 135. And as for the target, I think we can quite deep the target on this specific stock, and this upward trend line would be a very the target on going stable, very stable. So like next one, this stock price is at 90 piece. Alright, so if I just zoom out on this, what am I saying? I'm looking at all the move to sometimes time passes on analysis, I find a little more linear about the lines, those lines price this crossing the line, so just nothing. And this information is going to and this has to be active in the supposed to use in addition of that also in direction of the so let's see one report each and we back to test the list slowly. And if I after this so this was pretty so on, but right now this is how we package it on this I can expect to break this level so that my stop. So that becomes a viable stop loss level for us. And with that stop loss level, this honestly wouldn't be my top pick currently because it can continue to it has been in consolidation since a long time now, more than since June 21, or rather, if you see since March 22, the stock has been in consolidation, and I don't really see any sign which is indicating that consolidation might end just yet. So this is not going to be my top pick. I think there are better momentum players in the market giving better opportunities right now. So with respect to Balram Porcini, where if you are going to hold it on for a few months, then I think maybe to be a little bit on the safer side, since you've indicated that you want to hold it for at least few months, then go for this next best support as your resistance. Value around 23-24% of stop loss, and I can expect that when momentum comes back, the stock can rally and test the target of around 680. So that is what you should hold the stock for. Now moving on to with our analysis, we have Nandan Kishorji asking for OFSS. I was looking at OFSS just the other day, and it looked pretty attractive to me, so we're going to remove the drawings and we are going to redraw the trend lines. That is a very apt internal trend line. So here we can see that the stock is already in pretty strong movement, and here it has taken pretty good support at this trend line. Is expected to go up here. When the trend line reached, it did it with a massive gap up, and right now the stock has come to the bull range to take support and is pretty set to rally higher, as is also indicated by the positive divergence on the 75-minute time frame. The 15-minute time frame has also shown a strong positive divergence, and it is giving us a second dip to potentially re-enter. So you are looking at holding OFSS for a short term, so you're looking for analysis for next week. So I would suggest you continue to hold on with a stop loss, very liberal stop loss at 6861. You wouldn't need such a big stop loss, but still. And if you can hold it for next few weeks instead of just 1 week, I would suggest you hold it for a target of 10,100 rupees. So we have time to just look at few more stocks. So MTNL, we are looking at MTNL for Karan. How much is the target for this? So in order to look at the target, I'm going to have to first assess the trend. Not very attractive, I would say. It has just after a very long time started to create a higher high. The good thing is that the higher high formation is coming with strong volumes, which is promising. So if I can mark this range here, move this, you see this breakout has come up and with pretty still portfolio at any point of time. So let's look at the last stock of the day for Harshit. F Utilities Limited, a new stock for me. I have never assessed this stock before. Trend wise, it doesn't really have much to offer. It seems to have created a new low and is just about to create a new almost the first higher high of its life, or maybe I could consider this as a higher high and this as a higher low, who's to tell. But not, I would say the market has much better stocks than this. That combined with the fact that there is a negative divergence on the daily time frame already emerged, I think it would be a little difficult for the stock to go beyond 1100. Coming to the 75-minute time frame, again, I am seeing some negative momentum build up here. The volume is not as attractive as I would like it to be on the upsides versus the downsides. So for me, BF Utilities is not a stock where I would pay a lot of attention or put a lot of capital behind. So with that, we come to the end of today's session.